What's going on, guys? Um, I lost again. I lost a lot today, and I'm not really happy about it. I was live with the Discord. I'm pretty sure I also had a live YouTube video, live YouTube feed for the people that can make in Discord. And I'm just upset by a few things, and I'm not upset with you guys. I'm upset with myself. For the fact that there are some very obvious things in the market, and I am just oblivious to them. I'm also very impatient. And I know I say that a trader needs to be emotionless and can't have a feel for its money and whatever, but trust me, once you're a teenage guy in some serious fucking debt, you have no job, and trading right now is theoretically your only source of income, making money is a little priority. And to be completely frank with you, losing after losing after losing while being a content creator and posting chart, responding to questions every single day is very tiring. It's very stressful, and it puts a lot of pressure on my back. Every time we do a live stream and I lose, what does that just gives the idea that I don't know how to trade. That just gives the idea that I don't know what I am doing. And that's a little upsetting because I have a community now with over 85 people that every day open their Discord and wait for me to post something about S&P 500 or NQ or QQQ. I can't speak from all those people, but I know some people look up to me for how to trade, for how to get started, for maybe more advanced stuff, right? Or people, just based off what I do, maybe take their own trade and their own strategy. But with the bias that I have, they think it's so good that, they use my bias to take their trades. And to be honest, that's the stressful part. Because if I give a call out and I say buy SPY here or buy, the S&P 500 right here, and it goes down and I lose, then everybody loses. One person's going to be mad. One person's going to be angry. One person's just going to say, you suck. I'm out. I'm going to find someone that's better. To be honest, I think that should probably be the best idea right there, but it just puts a lot of pressure, and I just haven't had this kind of experience before as a content creator. I have had a community before. Don't worry. I know how to handle these things. I've just never done something with money. And trading, as you see, there's a whole lot of people that know what they're doing and a whole lot of people that have no clue what they're doing. And it's very hard to distinguish yourself from the crowd as a young high schooler that is in debt. It's pretty hard because every day you're trying to make money. You're trying to make money quick, and you're trying to make big money so you can get out of debt. But you try to do that and you lose more. And it's a cycle. A very deep and dark cycle. Now, before the video gets depressing and you click off, I want to hold myself accountable. Hold myself accountable for the losses today and explain how they happened and what was the bias. Okay. I do have a few notes here. Where did they go? Shit. There they are. So what are the mistakes? Market structure shift not happening during live markets. Yep. Trading so close to all-time highs. Yep. And not seeing smart money tools or diversions with other charts. So NQ, QQQ, ES, and YM, the Dow Jones. If you've watched any of my 3 previous videos, you would see something very relating. You'd see something repeat here. And if you can see what the mistake is repeating, then you get a sticker. But I can tell you right now that the SMTs have been a huge mistake that I've been repeating over and over and over and over. If you go back 3 videos, 1, 2, 3, and you watch them all, you would see that the only mistake that gets repeated is not seeing SMTs and not watching other charts. That's one. Trading so close to all-time highs. As you can see, SPX had all-time highs here at this black line. Really scroll back. Let me just go on the daily. Probably easier. All-time highs right here. Okay. And problem was that yesterday we had on Thursday we had a very manipulative move to the upside, which we did catch a trade on, which was a positive. But then I was kind of expecting a retracement. And what I was expecting, and I'm pretty sure I said this in my weekly outlook. I said this. I said, for Friday, SPX looks exhausted and it will probably run up to take daily buy side during Asian and London session and then make its way down to a discount array. And this is what I had. As you can see, this is on Thursday. This was our big move up, right? Hit our standard deviation. As you can see, it's perfectly lined up. And that's, I marked out buy side liquidity up here. That was a previous day high that we're going to take out because we're so close. All-time highs are right here, right up here. So we're close, but not quite there. I said we're going to take out this buy side liquidity during pre-market, and that's it. Never did I expect that we would take these previous week highs. And keep in mind, once we're here, we've completed the standard deviation in my personal standard deviation. That's the top of the top. And from there, we would sweep it and come down because we've created such a big range. Because from this swing low to when price comes here and sweeps it and creates another swing high, that's a discount in premium. So then what would price want to do? Come here, look exhausted, come back down here, midway equilibrium, and then go to all-time highs. So never did I expect this. Let me go to the 1 hour so you can see. As you can see, this was the buy side liquidity. Actually, let me change. This was the buy side liquidity, which gets taken out at 2. So during London session, or right before London. And then you have previous week high right here. That gets taken out at 6 in the morning. So New York start of the session. And all-time highs are right here, right above. And how far above do you ask? Where's my tool? There it is. Let's see. Right there. Literally $6 away. Not even. 0.14% away. That's all we need. It's a tiny move. Let me go on the 3 minutes so you have a better idea of how small a move this is. It's maybe 1, 2, 3, 4, I would say 6 candles. And that's all we need. Just a little more run up. This is how close we were to all-time highs. That's huge. That's huge. So I knew this. I called it out in the Discord while we were doing live trading. I said, "Hey guys, we're pretty close to all-time highs, but I don't think we're gonna hit it today." Let's actually see what I said. If we go to SPX, I'm pretty sure I said something like this. Yeah, I said I'm bearish, retrace down at least 30%, or 50%, and then hit all-time highs Monday or Tuesday. So I was expecting Monday and Tuesday to get hit with all-time highs, but it happened today. As you can see, we had news at 10. Still bearish. I'm still bearish, looking for price to sweep London lows before news. Now, we did get a retracement, but not the one I was expecting. As you can see on the 1 hour, I think the mistake that I made was thinking that the retracement area was from this swing low to this swing. Actually, let me draw it the opposite side. From this swing high to this swing low. See, I thought this was the range. I thought it was the range. I think the mistake I made was not realizing that there was actually a range right here. And that we tapped into a, what's it called? A discount array on this fair value gap. Now this is all happening on the 1 hour, so as you can see, there's one fair value gap here. That obviously gets created right under the discount. And then there's another one, right? So you mark both of them, if you will. Then you go down to the 30-minute, and then you set up your chart, if you will. And let's see what happens. So weekly highs here. Let me just put it back to where it was. The range is here. Consequent encroachment is here. You can see it comes down. So it sweeps. This is expected. Comes down at 8:30, 9 a.m. You can see that this takes out that 1 hour fair value gap here. And what we're doing now on the 9:30 is we open. And it looks like we're going down, 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 down. And this is where I thought, personally, we would be going down, all the way 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 down to go into a discount array. And I was thinking this 1 hour fair value gap here would get tapped into. But it didn't. And that's because price ultimately knew where it wanted to go, and ultimately knew that it wanted to hit all-time highs because it was only this far away. And so what did it do? It retraced, and you know where it retraced to? It retraced to the furthest discount array it could find. Here's an order block. Taps into the order block. The furthest discount array it could find to accumulate the most buyers to create a strong push. And I'm pretty sure someone told me, I can't remember, I'm pretty sure it was Harley, told me that YM, I think it was YM, right? See this low here? 8 or 3:30? Or was it 8:30? 5:30, 3:30 something? God damn it. Okay, no. I thought that was an SMT. Never mind. Anyways, it reacts off this fair value gap pretty strongly. And in my mind, I like I said, I was looking to go short, right? Because in my mind, I had, again, draw this range. In my mind, this is what I had. And so in my mind, I wanted price to do something like this. Go from here, hit this, come back into the sell model, and come into discount. Because when you're looking at price here, you'll notice after it sweeps a high time frame PD array, because this is an old high and an old weak high, it creates a breaker block right here, which is very nice price action. It also creates a swing low. And that swing low creates a swing high. And then what happens? We break structure, market structure shift on the 15. So obviously I was expecting a bullish run back up into it so we could short it. And so what happened? Delete these for a second. What happened was I had my range wrong and the bias was also very wrong. But if you've seen me trade live, I drew my range, saw the premium, discount, you can see equilibrium, price respected there, so the range was valid. But I was looking for up here. When you drew the OT down here, you could see the OT was here. You drag it out. Whoops. Okay. That was going to be my entry. That was my entry. Where did I see the inversion fair value gap? Right here. There was a inversion fair value gap that happened right in the middle. So I also had marked out. Now we could delete the OT because it's basically the same level. And I said I would enter off the consequent encroachment of that inversion fair value gap. As you can see, and I don't know how I didn't spot this, but in my let me go back to my previous wins. As you can see, I guess you can't see. Open in browser maybe. Okay. Just look at the price action here. It trades up, and this was yesterday. But look how it respects this OT level. Not only does it not trade through this OT level, it also closes above the OT level. And then this candle here respects it even more by trading down into it, but closing way above, almost out of it, but way above. And these candles follow above equilibrium. So the price action here, even though it's on the 1 minute, respects these levels. Does price respect these levels at all? Let me redo the OT real quick for you guys. Do they? Hell no. They don't give a shit that it's there. They don't give a fuck that it's there. Look how high this candle trades. You see that? You think if it was bearish, first of all, sellers would start selling the moment it's in premium. But this goes all the way to grab this little 5-minute SIBI? Are you kidding me? You're saying that this 15-minute OTE, where price should respect this level and respect this one, it shouldn't like trade above it, is getting traded right through? So what did I tell myself? If you're in the live stream, I just gaslighted I gaslighted myself into believing that this was a good trade. I gaslighted myself that thinking that this model could work. Really? How the fuck do you do that? Well, I told myself, oh, yeah, I mean, it traded above here, but if it closes down here, we'll be fine. Really? Even on the 5-minute, you can see that it doesn't work. This candle here is the one that we entered on. Agreed? If you go back, you'll see me entering every time on the OT, and my stop loss is always, almost always on this black line. That means that right here and then, we would have gone stopped out on the candle we entered. Let's go back, find another trade. This one. Do the candles come close to the last OT or the last OT level, and do they even trade past them? No. Do they close above the OT? Yes. Fine. That was on the 1 minute. Let's go to the 1 minute. Let's see what happens on the 1 minute. This 1 minute chart could give less of a fuck that those OT lines were there. It didn't even know it existed. Just went right through them. Just right through them. Now, the thing is, here in this example, I don't know when this was, but you can see there was definitely a fair value gap here, and it definitely hit consequent encroachment. And you can see that it traded up, market structure shift, and it came down very aggressively. Marked the range correctly. OT was marked. There was no fair value gaps, anything. There was a fair value gap here that it tapped into down here. That's what it respected. But you can see that if you entered off the consequent encroachment and price traded down into this, right? If you just enter off the consequent encroachment, at least you're in the position, and it closes. That means this candle closes above the OTE. That means it's disrespecting the levels. Disrespected. I think the way to trade the model now would be to wait until this candle closes above and then enter. Yes, maybe you're losing half a tick or whole tick, but at least you're not losing your position. At least you're not losing the trade. I don't know why I just opened Webull. Okay. So what I want to talk about is, my bad, I had to take a call from my little brother. So yeah, listen, I should have known that this was not a good trade. And I think the emotions got the best of me when this came down, right? So I held, obviously you can see this candle here, disrespect the shit out of this OT. And I think the moment I should have sold was on this candle or this candle, both. This one closed above. This one closed above the entire OT, so that should have just been a automatic no. Now keep in mind, my stop loss is up on these highs, so, you know. But I was like, oh, maybe it can come down. You know, maybe it just needs more buyers. Man, what the fuck? Look at this fucking wick. If it traded up here, what do you think it can happen? It can most definitely trade there again because it already traded there. That means that this whole area here can easily be bought up because this price has already discovered that area. It's almost like it pierced through the armor. So the next time the blade goes through, it doesn't have to pierce through anything. What it's really going to pierce through is up here. Oh, what's up here? All-time highs. Right above. Almost like a magnet. So yeah, it came down and I said in the live Discord, I said, hey, you know, I can easily see this hit some kind of fair value gap and move right back up. And the moment I knew this was going to be gone, when these 3-minute candles respected all these lows, this was a killer. You see this? When I saw this, I got out. I said, I'm out. I'm done. Price reversed so hard that it just gave me a traumatic experience. So that was the first trade. As you saw, that was the wrong bias. I think the whole bias today was just no trades, or maybe just all-time highs. I mean, we got so close, why not just take them out? Personally, this is my thought. I thought that SPX wanted to breathe a little bit and come down and accumulate more buyers to really come down to, or come up to all-time highs. But it just looks like all I needed was just this little tiny move down here to accumulate all the buyers it needed to manipulate price to its new all-time high. So listen, if that's what they want, that's what they want. So that was the one loss I took, and then I made a even dumber loss right after, and I'll explain that. Basically, I looked on QQQ, and I looked at the last time that it hit all-time highs was back here. And you can see back here what happened. I think this was on the week, no? Yeah. It went up. This is the daily. Hit all-time highs here, and then what happened? Traded up, completely down. Even on the week. Traded up, up, and then absolutely sold off. So what I thought was going to happen on SPX was the same thing. I thought that all that was going to happen was when we got all-time highs here broken, I thought that obviously I was expecting some kind of move up or some kind of manipulation up, which we did. I just didn't know where, because there's no levels down here or up here that we can really use, and the only thing we can use is probably standard deviation. But if you really do standard deviation like this, it probably won't tell you much. Let's just do this. It just tells you the consequent encroachment of this, I guess. Right? Standard deviation, I guess. I guess it works. Right, but it didn't go to the negative 3.5. It wasn't really that manipulated. Only thing is, I was expecting a move down. Right? It traded all the way up here. And remember, the open and close are down here. So that means I can easily trade back down to all-time highs or previous all-time highs. And it won't even create a doji. It would just look like a wick. And I was trying to catch the wick. You can see that when you look on the 5-minute, there's a lot of market structure shifts that can happen. 5-minute, 3-minute, 1-minute. And I think the mistake was looking on those lower time frames on such a big time frame move. So you can see here, we create a swing high. This current swing high here, or swing low, that current swing high here gets broken. So guess what? Standard deviation, right? Swing high, swing low, blah, blah, blah. Then it breaks this, it comes back up, sell model. And then I found that on the 3-minute, there was a little more. You just kind of keep moving it up, right? You can already see this one, or let me take this one, for example, because this one is the one I took the trade on, I'm pretty sure. When was this? 3:30? Yeah, basically right here. So what happened? It hits this. This was, I don't know if you saw this live, but it was super volatile. This candle went all over. It went, it went like, and so what happened? Well, if you realize what happened, 3-minute swing low. So it's a higher low. I marked this out because I was just marking it out here because the previous one was here, swing or higher low, breaks out, boom, create the swing high. And then guess what? Comes down, creates a higher low. So swing low here, creates a swing high, looks like to be the very high of the high. And then comes down. So while this is happening, I have my standard deviation already marked out, and I'm already like, okay, yeah, this is perfect. You know, it's the what we're targeting is not even, it's like halfway through the wick. This is perfect. It's basically right there. We'll get out basically at all-time highs here. That was the plan. As you can see, didn't quite work. And I have two reasons for that. So yeah, it came down, pierced through this market structure shift. I watched an ICT video that said that this is a valid market structure shift because it pierced through it. But for me, a super valid market structure shift would be for this candle to close right right there and there under the market structure shift, under that swing low. It didn't, but it did on this one. And I watched this on the 1 minute. You can see on the 1 minute, it does close, but on the 1 minute, that swing high is here and it gets broken through here, but not to worry. As you can see, we create a range. So what I do, swing low or swing high to swing low. This range is a sell model. So what do? We look for the OTE. Boom, OTE is here. What's almost in the middle of the OTE? A balanced price range. Right here in green. No way. Look how, oh, well, I guess this is full opacity. What happened? We also had a breaker block right here. Mark in orange, fuck it. Oh no. So I was expecting price to come up and hit those areas. And well, as you'll notice, what happens? I'm gonna just delete this because we're not important. On the 1 minute, we ran up. This was the part that I recorded this live too, but this was not live in the Discord. This all happened. I don't know why I don't know how to change the date. I swear I have canvas scale status. Where is my 24 hours? There it is. There it is. This happened at 2, almost 3. So I was expecting this hit at 3:01. So that means in exactly 1 hour, market would close. Realistically, do you think in 1 hour, this price can come all the way down here? That's what I thought. Especially after making all-time highs. That means that all the buyers used all their money to just really buy it all up. The hedge funds really did everything to push it up. And it does this 3-minute market structure shift. And you really think all those hedge funds are going to respect your fucking OTE level? Hey, maybe pro tip, don't trade during price discovery. You don't want to, there's no high time frame PD array. You can't base your trade. The whole point of a sell model is because this price here would have hit something here. That would be valid if there was a fair value gap, an order block on the day, the week, the monthly. That's it. But because this was a new price discovery and this was the all-time high at the time, to me, that seemed like a fair hard time frame PD array, but it didn't react off of anything. This move down was because buyers were just selling their position because, you know, they're writing everything out and, okay, I'm selling. Oh, everyone's selling? Okay, I'll sell. Oh, everyone's selling? Okay, I'm selling. So everyone sold. And the hedge funds bought it back up. As you can see, we got completely demolished. Again, even on the 1 minute, you can see OT is disrespected right when we enter. It does not even close under. On the 1 minute, remember what happened on here, the 1 minute. Look at this wicks. First of all, there's a fair value gap under there. Let's see if there's a fair value gap up here. 1 minute. Look how big this 1 minute is. That's huge. But you can see this consequent encroachment doesn't get respected either. Boom. Don't take the trade. That easy. It's very nit and greedy. Or nitty and greedy. I don't know how to say that. So, mistakes, market structure shift not happening during live markets. That's when this market structure shift over here. You know when it happened on the 15 minute? You know when it happened? This was created at 7:45 and it broke during 9. So this whole market structure shift happening and this market structure shift being broken happened pre-market. So that means that the buyers and sellers weren't even real, like they're not in action. Okay, that cannot be real. Can't trade that. Although it looks like a good setup, can't trade it. Sorry, just does not work. I need to see the high time frame PD rate get hit live market. I need to see the market structure shift get created live market, and I need to see the whole move and the whole model get created in live markets, not one in aftermarket, not one in pre-market, and one in freaking this or that. The only exceptions would be if it happens on like a 1 hour time frame, right? If we remember yesterday, I'm pretty sure the market structure shift happened on Wednesday, but we took the trade on Thursday, right? You remember that? The OT was here. So that's the only time I would allow it, because price needs time. Because listen, if you're taking I don't think I've ever taken a trade on the 1 hour with this model by seeing the market structure shift happen here and then seeing price go up, like break it and then retest it and then go like I don't think we have that much time in the day. Like seriously, because I'm pretty sure look at Monday, for example. 7 a.m. When was this? 7, so we go back to what? Starts at like 9 to what? 4? That's all the time you have, bro, in hours. That's it. There's no way that it creates a swing high, breaks it, rebalances, and then does your actual move. No way that happens in just that many like candles. So that's the only time I'd allow it on higher time frames, above maybe the 30-minute. 30-minute still could probably happen, but anything above, the 5-minute, if I'm entering on the 5-minute, I need to see the whole model happen live. I need to see the high time frame PD rate get hit live. I need to see everything happen live market. If it's happening on the 1 hour or higher, then it can last a few days. Other than that, that is it. That's it. So that was a lot. Sorry to keep you waiting. We will be back on Monday. And I hope you guys have an awesome weekend.